All right. Welcome back to the Harmonic Trading Club, HTC FX Live. We're going to be talking a little bit of Forex today. Had a couple of pairs that I just want to run by real quick. So, again, not trading signals, just how we look at the market technically and structurally. And of course, we do identify things that could be opportunities, but it's just more about an understanding of what's happening in the market. That being said, please be advised that there is a disclaimer: trade at your own risk. These are not trading signals or trade advice. So, that being said, like I said, we have a couple of different pairs that we want to look at, and we'll start with the first one. And we get a chance to start off with the potential for a very good counter trend trading opportunity, bullish bat pattern. I don't know why the bat pattern has been so frequent as of late, but they just keep popping up everywhere. So that's where we are. So we'll talk about it real quick. We might be able to get into the probability of it reacting the way that we think. We might we'll talk about what we would need to see before we even enter the trade, because of course these are a lot heavier being on larger time frames. Like in this case, I think everything I'm going to talk about today is on the daily chart. So of course, we need certain things to happen before we would even consider, meaning confirmation. And knowing that there's some conviction from the institutions that they might take the same trade that we're taking, so that we're just not completely wrong, blown away. So I already did the markup for us. As soon as I identified it, you can see this bat pattern qualified a 53% B leg from X to A, and then a 52% C leg. This one's almost perfect. And then here's our 886 D leg. I'll make those a little bit bigger for the viewers to see the rules of engagement. And if you want to know more about the bat pattern, yes, we do have this class, one of our most viewed in the Harmonic Trading Academy playlist, where the advanced patterns are under module 5. So about this guy here, there's a couple of things I want to say about it. Is he's not filled yet. So this part right here, I want to go ahead and help with your trade psychology if you're someone that trades any system, any strategy, but advanced patterns or harmonic patterns. So if you have this issue, we'll put it under FOMO, fear of missing out, because you don't want to miss the trade. So number one, we're on a daily chart. This could fill today, but even if it does fill at the D leg, that does not mean go. It just means the pattern is filled. It's just really at this point, it's what I would call or classify area of interest. I'm only interested in what happens once the pattern is filled. And I will say, and I've said this before, yes, before in my prior days, before I got a lot better with dealing with harmonic patterns, I would say it's filled, it doesn't matter, I'm taking my chances, I'm entering, boom, and get blown away if it's a failed pattern. So yes, I've learned how to avoid those, and sometimes on these advanced patterns or harmonic patterns, I will walk away. And that generally is going to depend on how the CTS scores, the combined technical score, at the point of fill, is it oversold yet? Okay, and is there bullish divergence? As in where we are now, the chart is showing that that's lower than the previous low, but RSI saying it's higher. So in this case here, where the chart is saying that yes, on the chart, the D-leg completion looks lower than the previous low, RSI is saying once that fills and gives you the rest of the things that you want, that this would be considered bullish divergence. That's how you tie together bullish divergence. Obviously, you guys can tell I love teaching, and I kind of live and die by CTS. That one only, the pattern would give me some points. The RSI oversold plus bullish divergence will give me some more points. Then I could start going into things like lower time frame confirmation, higher time frame confirmation, jumping out to the week, jumping down to the 4 hour, and seeing if I could build the case even higher. But for now, this is pretty much going to be good enough off the trading time frame. So again, this could fill today. That doesn't mean enter today. I won't take this trade unless I get some more confirmation. Two ways that I've talked about before. Either Tuesday's candle needs to close in my bias, meaning bullish or black in my case. That's the only way I would enter. If this closes and then Tuesday closes white bearish, I still don't enter. The other thing that I would be looking for is a 3-bar reversal. Maybe Tuesday's candle is a doji. Okay, Tuesday's candle. Remember, this is just an area of interest. I'm just looking. I'm just going to wait 2 or 3 days. And that's something that every trader needs to wrap his or her head around, is being patient. Let the market come to you. Let the setup come to you. Make sure that there's confirmation before you enter. So Monday, maybe a fill. Looks like we could get it. We could even get it Tuesday. But if this does come down and fill Monday, Tuesday doji candle, and then Wednesday at the earliest is when I should be entering this. I mean, it could happen Tuesday if the candle looks convincing enough for me on Tuesday. But this is the setup that I want. So fill on Monday, Tuesday doji, and Wednesday bullish candle closing above the doji for a 3-bar reversal. Now, why I'm here talking about that, let me show you right on this chart why I want a 3-bar reversal like that. It happens to be right in front of us before I go on to the next couple of pairs. How we doing over here? All right. So the reason that I use that confirmation technique, and you can see it right in front of you, is because of this. Check out the last time a 3-bar reversal happened here. Okay. Long bearish engulfing candle. Distribution, okay? Doji candle, almost perfect. Small body, let's come a little closer. Small body, upper and lower shadow. Followed by trigger bar and entry candle, okay? Notice that's the same thing I want here. Now let me talk about the way that that reacted, okay? Guys know that I'm a very, very strong proponent of the 3-bar reversal pattern. Swing high to swing low. Okay, remember, that's where we would trade it from. Using the Fibonacci retracement tool, swing high to swing low, which is the doji, okay? And notice how this trade, this 3-bar reversal, even with no pattern present, the last time it happened, is a winner exiting at the 618 retracement, and then the trade rolls away. So we'd be expecting to do that one more time. Okay, rewind that part if you need to see it again. That 3-bar reversal, how it reacted. Enter at confirmation. It's okay to hold off for a little while price action falls back sometime. This is where your trade psychology has to be strong to test the new structure created by the doji. Okay, and then you get the reaction. So you guys can see over here at the Harmonic Trading Club, we like to walk through, show you the story that the candles are telling you while keeping things clean, because the candles will tell you the story. Okay, so we'd be expecting, if we could get it, that same type of reaction here. Fill, doji, hopefully a 3-bar reversal. If we can't get it, we'd have to consider other things. The only thing that we do know is we did have our oversold condition, and it's probable that we will get the bullish divergence. After that, we're going to have to use some patience and be really tight about our entry so that we don't get hurt. Now, if that does happen, the only thing is things change a little bit. You saw how the last 3-bar reversal reacted. We'd be going for the whole entire move, because now we're dealing with the whole entire harmonic structure, not only the most recent high to the low entry. We be dealing with the harmonic reaction from A to the PRZ, and that's going to look different. Now, we don't have the rest of the puzzle. Remember, this is an area of interest. So looking at the whole entire right side of the pattern, A to the PRZ, we don't know where it's going to be, but we can look at a target that will be somewhere in this area retesting the C leg. So that's the 618 on that side. I'll get rid of 786. I'm not that interested in him. So that's how I'm looking at Euro Great Britain pound, very close to filling. Once it fills, I'm going to wait and see what he tells me about entering. You guys get all that? It's not as complex as you think. Most of it has to do with your trained reticular activating system, and then your trade psychology has to kick in and protect you from just entering a trade just because. All right. Next on the list, let's go look at pound CAD. This story is going to be similar if it can hold and stay true. we're dealing with a case of trend continuation here. So not an advanced pattern. It actually is. I'll get into that after I talk about what made me even interested in this area of interest. But it's actually giving us the same thing that we want to see. I want to start with identifying why, right? It'd be good to know why you're getting involved in a trade. In this case, we're getting involved in this trade because this thing right here was moving sideways, not valid, not breaking structure or going low, and then finally attempting to break out. So you see this action here, and then still trying. So we're basically being allowed to get involved in this trend. So that's basically what we're doing here, is trying to get involved in this trend. Now, with that part being plotted out, we have, again, drum roll. Let me get rid of this guy. 3-bar reversal, okay? Bearish engulfing candle, followed by doji, but it's a little funky. It's got a crazy little tail, more of a hammer candle, followed by what could become trigger and entry as long, let me get rid of this guy right here. I don't need any of this stuff. As long as that candle closes above this doji candle here, okay? So bearish engulfing candle, kind of like a doji, more of like a hammer or dragonfly, followed by working on the trigger and entry, needs to close above the doji. And if that can hold, then we'd be looking to get involved and stay involved in this current existing trend with a 2-target setup. Target number 1, retesting the highs there, okay? Target number 2, extensions off the recent move because we're in trend. So at this point, we'd be using projected targets. The 127 extension of the low to the high for target 2. So again, really not too much more I need to say about it because the current daily candle could suck back down and we don't have confirmation. If this closes, and that's in 2 hours and 32 minutes, the trade can be taken. So that's how I'm keying in on that area of interest. Last but not least, that would look pretty good too. I don't know exactly how it would end up, but if it did close above it, it looks something like this. The risk versus reward, about 1.5 to 1. Just wanted to drop that in there if it holds and stays. Last but not least, EURCHF is the same thing. Now, remember when I talked about the 3-bar reversal in the middle of Euro Great Britain Pound, using the most recent high to the low for the target? I would be doing the same thing for EURCHF. It's in progress. Engulfing candle, which I wish it was bigger. Followed by doji, followed by the current confirmation trigger and entry candle that needs to close above the doji. I'd use the same thing that you saw on Euro Great Britain Pound in the middle here, not the current, on the middle. I'd use the same thing. I'm using the same concept. If that breaks and closes above that doji, I'd be looking for targets from the most recent high to the low. All these things are already intact already. This is just a matter of waiting 2.5 hours for that day to close. And looking at the 618 retracement. Now, the thing about this one is this structure, we're actually dealing with new structure low, violating and taking out the previous lows. So not a complete reversal like changing the bias, but just looking for a chance for this to get involved in this correction back to the upside. So in 2.5 hours, depending on where this candle is, if I were to enter, I'll just put him anywhere nearby. I don't know where it's going to be. Put him here. And if I'm able to get up to the 618 retracement with stops right up under the doji, I'm looking at 1.45 to 1, which meets my criteria for better than a 2 to 1. So that's how things look for this FX live workshop. Those are the 3 things that are on the table that I'm looking at. Again, waiting for confirmation on pretty much all 3 of them. And hopefully I'll get a chance to come back around and tell you how these 3 trades play out if I'm able to take advantage of them, if I get the things that I want in terms of confirmation. But anything that I talked about in this video, you can find all of it inside the Harmonic Trading Academy playlist. Depending on what you're looking for, one of the modules, whether it's that advanced pattern, whether it's just 3-bar reversal stuff, whether it's that CTS, combined technical scoring, dealing with RSI, everything is over in the Harmonic Trading Academy. I should have asked that you guys hit the like button on this video before I even got started, but please hit the like button and share this video with a trader that you know is trying to learn more about trading, or someone that you know that this can greatly help. Other than that, subscribe to the channel, hit the bell icon so you can be notified when the most amazing videos on technical analysis on YouTube come out here, courtesy of the Harmonic Trading Club, free on the house. No gimmicks, no gurus, no fakery, no telling you how to get rich overnight. No, we're trading on a beach or trading on a yacht or trading on a jet, the real way in which you see how the market works. That being said, you guys be good. Take care of yourself in the market, and we will